Hello everyone, welcome to our channel. I'm John and today I'm going to discuss GST. If you're an entrepreneur or about to start a business, GST is something that you must know about. GST stands for Goods and Services Tax and was introduced on the 1st of July 2017. Before GST, India had a very complex taxation system. The state government and the central government had their own set of taxes. For instance, state government had taxes such as VAT or sales tax, purchase tax, luxury tax, entertainment tax, octroi tax, and tax on lottery and gambling, and a lot more. Likewise, the central government had its own set of taxes such as central excise duty, additional excise duty, additional customs duty, special additional customs duty, service tax, and so on. After the introduction of GST, all these individual taxes were cut and put together, thereby avoiding cascading effect of taxes which largely affected the manufacturing and the business class. GST is subdivided into three categories: CGST, SGST, and IGST. CGST stands for Central Goods and Services Tax. SGST stands for State Goods and Services Tax, and IGST stands for Integrated Goods and Services Tax. Both CGST and SGST are levied on intra-state transaction. That is, the transaction that happens within a particular state attract SGST and CGST. So SGST, as the name suggests, the percentage levied under SGST goes to the state government, and the percentage of tax that is levied under CGST goes to the central government. There is a third category called IGST that is attracted on interstate transaction, which I will explain with an example. Let's imagine Mr. Ramesh, who is a distributor, firework distributor in Tamil Nadu, and he decides to reach out to a registered manufacturer and purchase fireworks in huge lots. He does so while attracting SGST and CGST. So here, the central government and the state government receives their cut of taxes. Then what happens is Mr. Ramesh, who is a distributor, apart from distributing within the state, he also decides to export some fireworks to the neighboring state, in this case Karnataka, to a retailer there. So what happens is, now the retailer, when he purchases the fireworks from Mr. Ramesh, who is in Tamil Nadu, this particular transaction attracts IGST. This may seem like a cascading effect again, but here's the trick. Since CGST and SGST are already levied upon the initial transaction and the state and the central government have got their cut, the retailer in Karnataka gets a tax credit, which means he does not have to pay the entirety of the IGST, and whatever IGST is collected goes directly to the central government, who then splits it up and distribute it to the receiving state, and in this case the receiving state is Karnataka. So this is the difference between CGST, SGST, and IGST, and the ultimate motive behind GST is to reduce the cascading effect of taxes. And one more question that commonly comes into picture is, does GST apply to every transaction? No. GST is not applicable for direct and indirect taxes such as income tax, corporate tax, or import tax. Likewise, certain products, especially petroleum products, do not attract GST. We'll meet again in another video with more information. Thank you.